In no particular order, we have 4 different miners, mostly based in North America. Adam Wiggins from Camfil USA, Bob Burnett from Barefoot Mining, Artem Bespaloff from ASIC Jungle, and Scot Johnson of Digital Shovel. We're talking about optimizing operations. Kind of standing up here grilling them, I suppose, but I'll be kind of passing questions among the 4 people here. Bob, we're going to start with you, talking about optimizing operations again. Barefoot Mining sort of operates these smaller stranded energy sites for the most part, and you have a great thesis talking about these horses and these elephants. Tell me a little bit about that and how you think about, like, I suppose, running small-scale operations in order to increase the efficiency of your overall mining capacity.
Sure. Well, we'll start with some definitions. I like to divide the world into 3 categories. Elephants, which would be large mega sites, tens of megawatts or larger. Rabbits, which would be individual miners, home miners, 1 to 5 machines running in a garage or a back shed. And the horses in the middle, operations from a few hundred kilowatts up to several megawatts. We specialize in that middle area, and we do it strategically for a reason. And first, it's for the overall network. It's my belief that if the industry gets too centered around elephants, that we have a risk where we become subject to attack. I have an article called Satoshi's Heel, if you ever want to go into the deep bowels of the mathematics behind that, but it's a danger for the industry. But the nice thing about the horses is that we can do them quickly. In fact, we've got Scott sitting next to me today. We're doing a small site as we speak. We funded the site on May 8th, actually sent some money to Scott for some equipment. Approximately June 1st, we'll have about a 300 kilowatt mini operation up. So when you look at a project, if you can get up quicker, that's a big part of efficiency, right? So if it's going to take you 4 months, 8 months, 12 months to get up and running, you miss a lot of efficiency in that time frame, and also a lot of variables can change that can force that operation to maybe be less efficient than it was expected, or run into other obstacles because of its complexity.
Yeah, I love the context there. And for further context, we're going to go through in this conversation sort of like the different levels of mining and how you can optimize, I should say, on every single level. So from the ASIC level all the way down to the facility level, and then firmware somewhere in between there. Scott, let's throw it to you next to talk about containers. Can you introduce yourself, what Digital Shovel is doing, and then how also you guys think about optimizing on behalf of your customers?
Yes, certainly. So I'm Scott from Digital Shovel. We're a manufacturer of mining data centers and then all the electrical infrastructure that goes into it. We got our start around the end of 2017 and been making containers ever since. Our initial goal was to try to make our containers as dense and cost efficient as possible. Once we can only go so far with that, our new goal became to make our data centers as autonomous as possible, and that means both on the ongoing operation, but also in the deployment. So things like automating the process of identifying IP addresses on your miners so you don't have to put a static IP on every miner, which can take a day for a tech to do. It can automatically identify which IP address is on which outlet, and then provide you with a spreadsheet, which you're going to figure that out on your new pod you're getting, and a variety of other features like that.
How do you work with someone like Barefoot Mining, just like on a capital level? How do you guys think about like deploying that capital and coming together to like find a way to make both money for both your guys' teams, right? But also save money for Bob's operation?
I basically try not to be greedy. I try to make enough money to be a profitable company, but have what we think is one of the best value propositions in the market, and that usually ends up working out for our customers as well.
Love it. Okay, we're going to keep going down the stack. We'll probably come back to containerized solutions and firmware because it's a pretty important part of operations. Let's go over to ASIC Jungle. Tell me a little bit about how you guys think about selling ASICs, and then you guys also have a lot of containerized solutions and hosting solutions for people as well.
Yeah, absolutely. Nice. My name is Artem. I'm CEO founder of ASIC Jungle, for those who don't know. We're a leading provider in procurement services for ASIC mining hardware all across North America, the Middle East, South America as well. Part of our customers, we work with publicly traded miners, family offices, hedge funds, oil and gas companies, you name it. To answer your question in terms of how we work in optimizing user acquisition for ASICs and how we work with our clients, well, first of all, it's important to understand the needs of the customer, what sort of environment they're going to run in, what's the electricity rate, what's the size of the operation, and things like that. So obviously we have an established framework of how we work with clients. So trying to understand first of all really what their needs are and what's the point of their operation, what point in time are they buying. I mean, there are times, for example, at the peak of the bull market where we explicitly told our clients that this is probably not the best time to be purchasing. And the way that we do, we obviously collect data from our own sales, from the public channels that are available for ASIC trading, and we analyze the data. Something that we did was quite interesting. Last year, we essentially created a scatter plot of ASIC acquisition prices on a dollar per terahash basis, and we overlapped it with Bitcoin price chart. And we tried to understand what are the typical trends for the volatility in the ASIC prices to be able to better guide our clients into their acquisition needs. And we came up with quite a few different findings. For example, we established that a mean on a break-even basis for the acquisition was 15.5 months based on 5-cent electricity. So understanding that, we understand that the mean price for the general customer is 15.5. We tried to dig a little bit deeper. So we calculated standard deviation, which was 7.6 months. So understandably, what that means is that if you're buying an ASIC, for example, 15.5 months break-even time on 5-cent electricity, plus 1 or minus 1 standard deviation away, that composes essentially 68% of your ASIC acquisition price. So you're pretty much in the safe zone area. Now, going into the bull market, we've seen at the peak crazy prices for ASICs, all the way up to $90, $96, $100 per terahash sometimes. And obviously, on the scatter plot, on the data set analysis that we performed, that was way more than 1 standard or 1.5 standard deviations away. And typically, what happens is those numbers, they tend to go back to the mean, for example. So that most probably wasn't a good time to be purchasing ASICs, and that's the sort of help that we were able to provide with our clients in terms of guidance, and actually turned out pretty well. ASIC prices did go down significantly, and what we're looking at now is really that those prices are stabilizing on a 5-cent electricity basis, and it's becoming a more and more better opportunity to be entering the market. So that's how we do. In terms of containerized solution hosting, we do offer hosting, and we do partner up with different hosting facilities. In North America and a little bit in Europe now, that's a bit of an old trend, but yeah. So for anybody looking for mining, obviously we can help you guys with that as well.
Awesome, thank you for that. So we've done most of the introduction so far, but Adam, we got to throw it over to you. And then at the same time, we've also talked about containers and we talked about ASICs. Tell us a little bit about Camfil and what you guys specialize in.
Sure. Well, Camfil is a global air filtration manufacturing company. And we're based out of Stockholm, Sweden. We have locations throughout the world as far as our distribution channels, and really our focus is really creating long-lasting, very high-efficient air filtration products. And with the shift to sustainability now and all the pressures that everyone's seeing with ESG and sustainability, Camfil was really very grassroots in that. We've been around almost 60 years, and we were very environmental friendly, from the beginning. And we've carried that throughout, our operational processes to current day. So that's a big part of our message as well. And the idea that being able to operate a mining facility. And with your filtration products in place to protect your infrastructure there, obviously if you're running cooler and you're running cleaner, you're going to be a lot higher efficient.
Love it. Okay, let's go back to Bob and talk a little bit about some of the top level things here. When I think of like optimizing operations, the first thing I think of is one, ASIC purchases, which we'll get back to with ASIC Jungle in a second. The fact that it's very easy to buy the top, it's very easy to get a bad purchase order for ASICs. And the second thing I would think of is either building too large of a scale for what you're currently able to do or building in the wrong place? And I think, Bob, you can answer the second part there, building too big or in the wrong place. Tell me a little bit about how you guys go through the strategic decisions to build in the correct place at the correct scale in order to save money downstream.
Yeah, well, I think if you decide you want to be in the mining business, the two things you have to start with are, first, where are you going to be? And we call that jurisdictional choice. And the reality is that there are places, we'll talk U.S. right now, there are places in the U.S. that are friendly, and there are those that are not. And just chasing a low-cost energy deal may not be in your best interests. There are places that we will never do operations in, for instance, California, Oregon, Washington, Massachusetts, frankly, New York, we will never go there. It doesn't matter how good the energy deal is, because we know that the possibility of a rug pull is very high. And so, and that rug pull could be just a flat out ban. It could be some form of taxation or regulation that comes in, but it's just not worth it, because if you want to talk about operational efficiency, the first part is the most important, which is operating, right? So if you're in a place where you might not be able to operate, there is no efficiency. Kind of wrapping back a little thing that Artem said, I really respect what he said about maybe telling his customers at certain points in times not to buy, or that it wasn't a great time to buy. I have something I developed called the miner's trilemma. And at any point in time in the mining industry, if you want to put a site up, there's three things that have to come together: energy, the mining equipment, and capital. And the theory that I have is that at any one point in time, one of the three will always be hard. And if the one that's hard starts getting easy, it will force a different one to become hard. And we've seen that play out. For instance, if we went back to just post the China mining ban, we saw capital just try to flow into the market. But what did it do? It drove up the price of mining machines to astronomical levels. And now we sit in somewhat the opposite situation, where the mining equipment is very fairly valued, but finding investors and finding people to come in gets very hard. If you go back to like a Warren Buffett thing, be fearful when others are greedy and greedy when others are fearful, that would say, hey, now is the time. By the way, I believe that. I'm not giving financial advice, but I guess I kind of am. If you're interested in getting in mining at a personal level, or even trying to put up a smaller operation, I think now is a great time.
Let's go over to the ASIC side. And just as I said a second ago, and Artem, you even talked about this, a lot of people made terrible purchase orders over the last 2-3 years. Bitcoin's price was up, ASIC prices were also up. People thought that the trajectory is going to continue. Since then, we've seen hash price hit its lowest level, essentially ever in dollar terms. So a lot of people did not make their money back, and they're still waiting on that day to happen. How do you think about ASIC prices? How do you think about guiding people to make the right acquisitions, noting that a lot of people who have been doing this for years completely failed in understanding the market last time around?
Yeah, well, it's a good question. You have to understand that the ASIC price, the ASIC market is just as volatile as the Bitcoin market. Actually, the correlation coefficient between the Bitcoin price moves and the ASIC price moves is about 0.85. So Bitcoin tends to be a lagging indicator of where ASIC prices will go if difficulty remains the same. What we've seen now is since Bitcoin dropped to 15,000, 16,000, ASIC prices dropped to around $10, $12 per terahash for S19j Pros, S19 Pros, things like that on the both used and new market. Although Bitcoin went up to $30,000, ASIC prices still didn't adjust, and partly that's because difficulty kept increasing, so it only became so much more profitable to mine in the past 3 months. But definitely where we see ASIC prices going now is obviously we have the halving next year, and historically 6 months after the halving, we know what happens with Bitcoin, and obviously that sort of becomes a confirmation bias at some point for people to get into the market. So that could be a sort of catalyst for new and institutional money to start flowing back into the industry again. On the other side, if you look at the ASIC manufacturing side of things, if you look at the difference between an S9 in 2017 and let's just skip over the S17s, but and you jump into the S19s, we're talking about a twofold increase in power consumption, but you're talking about a more than tenfold increase in, or pretty much a tenfold increase in terahash output. So what we're seeing now with the XPs, with the new Watts miners as well, is the efficiency of the new miners, and even if they start producing the miners with 3 nanometer chips and whatnot, the efficiency is not going to jump to 500 or 800 terahash. So you see sort of like flattening of the curve that's happening. And in my opinion, what that will do with an increasing price of Bitcoin, it's going to help stabilize the prices for older generation ASICs, which in this case would be the 100 terahash, 104 terahash miners. So there will be more value retention for miners from that aspect. Obviously, from a regulation standpoint, things are getting a bit difficult in certain states, in certain different jurisdictions. So that's driving people away to other markets as well. So it will obviously have a significant impact on the prices and the quantity of ASICs manufactured as well. But in general, I think the general outlook is definitely positive. I think. Look, we've been mining as well, right? So we obviously are able to get some of these deals for ourselves, and we've been buying over the past 3 months. So obviously, if you're mining on low electricity, if you're mining in other parts of the world where you're able to benefit from good power purchase agreements, from renewable energy, or certain of those good deals, it's definitely a great time to be buying, because this is what. Like looking back from a bull market perspective, you're going to be looking back and saying, "Oh, I wish I bought ASICs at 15, or I wish I bought the S19 at $2,000 when it came out." Now it's 10,000. So this is definitely the time that you want to be in. But obviously, it's scary because it's a bear market. You know what's going to happen. But if you look at the whole geopolitical outlook of the world, of the whole de-dollarization of the dollar and the world economy that's going, you look at gold prices, you look at just all these political and economic conflicts. I mean, it's just such a great use case for Bitcoin, and thinking that nothing is going to happen. I think it's a pipe dream. I mean, this is where you want to be. I'm not trying to sell you guys anything, by the way. It's not my point with this discussion. This is, as the other panelists said, this is what we truly believe. And looking back, I think this is a fairly good point to be entering the market.
Love it. Okay, let's go to containers. Scott, tell me a little bit about how you think about purchasing and selling containers to people, and also on the optimizing front, how do you come across these purchase decisions? How are your customers coming across them? And then even the parts going into the machines themselves when you guys are manufacturing these containers. You guys obviously have to save on that side, but you want to give people the best quality machines.
Well, I mean, I guess I'm biased in terms of the decision-making process. I like to think that it's based on the quality of our product and the value proposition. I mean, historically, up until call it the last 4 months, the only reason we didn't sell was because it would be 6 months if you ordered from us, just because of the volume of orders and the amount of hype money that was in the market that was basically just eating up our capacity. In terms of part selection and stuff like that, we try not to, well, we don't cheap out on anything. All of our major components are UL certified. Our entire pod has a UL inspection. There's individual circuit protection on every outlet, not a 40 amp breaker feeding 4 outlets, which is a recipe for a fire. Every single outlet has a relay and a CT, which allows you to monitor the current that the device is consuming, plus remotely switch it or put a watchdog in place so that you don't even need to have a tech there. If you've got an S19 that's running, supposed to be 3,300 watts, it drops to 2,500. A hash board's gone down. 90% of the time, you just need to unplug it, plug it back in. There's a watchdog that's watching that miner that will do that action automatically. And then if it doesn't respond after a couple times, it emails a tech to say, hey, you physically need to go look at that. And when you have a big data center, I mean, that's going to be somebody's full-time job to just sit and do that. All of that process is automated. Same goes on the overcurrent side. I mean, a lot of the last batch of S19s had a bunch of power supply issues where they would shoot up to 4,000, 4,400 watts, which they just shouldn't be. And it has a built-in breaker or software breaker that trips before the physical breaker does, and you can see the log of what happened. You can see what that power consumption was rather than just knowing, hey, my breaker chip, something must be wrong. You can go into our software and look and see what happened with that miner, what was the event that caused that to happen, and know, was it just a spike or was it consistently ramping that up, which is a variety of things we try to put in our systems.
I'm curious about the manufacturing side of all of this. The cost of parts has just been eating up a lot of people's budgets lately, but from you guys building these containers like in a bespoke fashion, how do you guys manage all that and then pass on the savings to the end buyer, such as Bob on stage in this case?
Vertical integration. So we go literally from the raw sheet coil to the finished product out the door. We assemble our own PCBs in-house. We make the PDU from scratch. Robotic welding we do in-house, literally from start to finish, whereas a lot of our competitors, they'll buy the panels from somebody, they'll buy the switchgear from somebody, and then take it and put that into a conventional shipping container. We moved off shipping containers, I guess just at the start of COVID, or just before COVID, where we basically form panels and make a modular container that is a very specific size. You'll see one that's out on the floor, and that size is built for a very specific reason. It is made to make logistics as easy as possible. So it fits on a standard flatbed truck with 1 inch to spare. It'll actually fit into a 40-foot shipping container. You can pick it up with a 5,000-pound forklift. You don't need a crane, which a lot of the logistics cost can become a very big component of your build, not just the container. But I mean, you buy a container, you might buy a cheap one used for 80 grand for a 40-foot. If you're in some remote area and you need a 150-ton crane to offload that, and the truck shows up 2 days late, you've got a crane crew, a rigging crew, all that stuff sitting there, whereas with our unit, you could just buy or rent a forklift for a couple $100 a day, which makes that process a lot easier.
Adam, I'm going to come to you in a second, but one last question for Scott. Tell me about the collapse in prices across all these container solutions. And I can think of a half dozen off the top of my head of different competitors in that market, and you probably know them all by name. How have you seen prices collapse during a bear market where there's a lot of people liquidating containers wholesale during these Chapter 11 bankruptcies, or people not needing them anymore, or people not being able to sell them because there's no buyers?
I mean, a lot of that you can credit to Compute North and their ramp up with RK, who knocked off one of our original containers. And then they had a pile of inventory. So he still has a pile of inventory sitting there through the RK through the Compute North bankruptcy rather. There was a pile of inventory, and there still is inventory in the market that they're just liquidating for pennies on the dollar. And I mean, it didn't have any effect on our pricing. We still remain consistent through the market. I mean, we'll have promos every now and then, but for the most part, we're still selling at the same price per megawatt as we were during the peak. But part of the reason for that is I don't increase my prices in a bull market. Our price is our price. Don't ask me for a discount when it's down, but I'm also not going to gouge you when the market's up.
Awesome. Adam, let's go over to you. Let's talk a little bit about some of the parts that go into these containers and how you guys think about it. So airflow is probably one of the biggest ones there, right? Where we want to make sure that we have like good pressurized solutions from intake to outtake. How do you guys think about it at Camfil, and how do you guys save end users who are mining with you guys?
Yeah, so at Camfil, we really take a total cost of ownership approach. And, that's a big buzzword in multiple industries right now, TCO. And in saying that, a lot of people just look at unit cost up front, right? So let's take an air filter, for example. There's a million different manufacturers of filtration products out there. But and the general public tends to assume that they all perform the same way. And that absolutely couldn't be further from the truth. There are a lot of specs written around filtration products out there, and test methods and things like that. But the reason, on that specification, a lot of those are very general, and they don't take performance into consideration when you're looking at that. And so, the idea that one filter A and one filter B, if they're rated the same, they all perform the same way, they all flow air the same way, they all capture particles the same way, is very inaccurate. And so in saying that, the particulate capture that you have, you can actually on panel filters, there's a lot of degrading of efficiencies there over time. And in many places where mining operations are set up, one Texas comes to mind in particular. You get in West Texas, there's a lot of dust flowing in the air, and there's a lot of stuff, flying around that could really damage your expensive data center there. So you have to protect that. And saying that, back to the TCO though, you also have people that have to come out and service that. You have to have people that come out and change those filters. Well, those are all added costs to your operation. And if you can use a product that may be a unit cost up front a little higher, but lasts potentially 2 to 3 times longer, your cost sometimes is cost neutral, or you can even offset that costing on the actual, filtration product itself. And really, TCO is the way you have to approach that, because that is cost out of your operation that you're having to service that on the maintenance side. And in a data center, a mining operation, the less you can really mess with stuff, the better. So the less you have people fiddling around in there, whether it's components or whether it's filters or what have you, kind of the better off you are. And really, so, by doing that, if you're changing filters less often by using a higher efficient, longer lasting filter, you're also throwing away filters less often. You're also shipping filters less often. You're also receiving filters less often. And so really that total cost approach there, again, if you can not touch it and it performs and it'll protect your data center, the longer you can do that and still maximize your airflow and dissipate your heat in your operation, the better off you're going to be.
Love it. Okay, we got about 10 minutes left, so we're going to go through rapid fire after I ask Bob one last question. And for everyone else, in the meantime, can you think of 1 or 2 tips that you'd give to somebody from the background of your particular industry? We have people on stage who specialize in ASIC or hosting solutions. Scott, you're really thinking about containers and saving people money on that front. Each one of you guys has like a different expertise you can save people money on, which is the point of our conversation today, optimizing operations. So if you can think of that, and in the meantime, I'm going to toss it over to Bob. Tell me a little bit from a mining perspective how you guys save when it comes to some of the bigger purchases like transformers or power lines. Do you guys think about working with other miners to save on capital by having redundancies, or do you guys just go out and find cheaper solutions on the open market? Like, how do you guys come across these opportunities to buy heavy infrastructure?
Well, we'll kind of come back to this time to market thing again to a little bit, that market for the bigger equipment has really been saturated. So part of why we do these horse class sites is that if we're going to do an installation at, let's say, a megawatt or less, even the one I mentioned earlier today, we were, as case in point, the project that we're working with Scot on, we decided in early May we wanted to do a small expansion, about 300 kilowatts, adjacent to an existing site. We were able to buy a transformer, buy a container, buy the mining equipment, all do that really since the beginning of the month. Scott told me earlier today the container that we ordered from him is on its way right now. We will have electricians next week kind of putting all the infrastructure in place. Transformer, I think, arrives today or tomorrow, and we'll be mining by June 1st. So I think that, again, it's the small stuff. If you want to do a 20 megawatts, 50 megawatts, 100 megawatts, you start dealing with infrastructure that is just massively complex. And it even has complexities, like Scott mentioned, like some of the things we can appreciate are when you can have something that sits on a standard flatbed that doesn't have to be an oversized load. They're not going to have to shut down a lane, 2 lanes of the interstate to move the transformer through. Those are big things, and they can really create problems for you that keep you from getting up quickly. And then there's all kinds of hidden costs associated with that too. You need a pilot card. You need like all these sort of things. Suddenly, a project that you thought was going to cost $100,000 costs $150,000. So, again, I really believe firmly in growing in bite-sized chunks. And I think in the long run, most people will find that they are more efficient, they mine more Bitcoin, and they do it for less cost if they take that approach.
Love it. Okay, Artem, we're going to go to you. Tell us a little bit about like the inside scoop on maybe how to purchase ASICs or just like something that could optimize someone's operation who's sitting in this room.
Yeah, so your hardware acquisition is your biggest fixed expense when it comes down to mining. 80%, 70% of your first initial capital expenses is going to be hardware. So you want to make sure that you're buying at a good time, not necessarily timing the market, but just making sure that your models, everything is making sense from an internal perspective, that you're actually looking at your numbers properly. Don't necessarily look only at the number one in terms of ASIC manufacturers. Number two is really good as well. You're going to save some money there. In an uptrend, they tend to be priced relatively similarly. However, in downtrends, there's bigger discounts on, I'm not going to mention the manufacturers, but on certain other manufacturers that are not leading the space necessarily. Very efficient machines. Look at maintenance costs as well, and how much downtime do you expect from every single miner based on the PSU issues that can arise or other issues that depend on the environment you're going to be running your ASIC in. Yeah, so don't necessarily try to go expensive on ASICs, but don't go cheap on the rest of the infrastructure because that's a bigger problem to deal with at the same time. If your transformers keep blowing up or your containers are not cooling down your ASICs very efficiently, that's also a big problem to have. So be wise with your capital.
Scott, same question to you.
I'm going to go to the electrical and the electrical hookup side. And one of the advantages of our setup is that they're modular blocks. So you can size your pod in your data center in 300 kilowatt increments and allow it to size to the transformer that you have access to. The biggest tip or advice I can give, get your electrical sorted out, because through 2018 and 2019, half the containers we sold didn't get hooked up. Guys would buy them, they're like, yeah, I'm going to get into Bitcoin mining. They would buy a container, they'd buy miners, and they're like, I got a bunch of power lines outside of this property, I'm going to make it work. And then they realize just how monumental of a task it is sometimes getting that volume of electricity hooked up. We had one container that was sold 4 different times, and then it eventually was driven into a bridge and crushed. But we joked because every time it was sold to somebody that was super ambitious, they had the money together and they thought, look, I'm just going to grab this thing and plug it in and it'll be that easy. Don't underestimate how difficult it is to go through that process of hooking up even 300 kilowatts, but a megawatt or 2 megawatts. It's not as easy as everybody thinks if you haven't done it. If you've done it and you've done your research, then that part is easy. But do your research and make sure you have that part mapped out rather than diving in, buying a bunch of equipment, buying a container, and then have it sit in a warehouse while you're watching difficulty go up and up and up while you're not mining.
Bob?
I think that some of the discussion was about, Scott even just talked about it a little bit, like used equipment being out there. By quality. If you're new to this business, take very small steps. Buy quality equipment from quality vendors that you can get support from. Don't get overly excited if you find out somebody's doing a liquidation sale because X person went out of business and there's some mining equipment or containers that are available. I think those landmines, it's funny that you said that, Scott, the same container sold 4 times. It's not surprising, but it's kind of sad, because you had people with the right intentions and the right capitalization, but probably didn't assess the complexity of the job. So that's one fault. But I think there is a lot of stuff out there. Obviously, you guys know several people went bankrupt. There's a lot of smaller people that went bankrupt. If you don't have the ability to evaluate the quality of that equipment, if you can't personally inspect it or have somebody that knows what they're doing that can personally inspect it, move on and wait until you can get the right stuff.
Adam, last.
Sure. The same theme here is kind of resonating, with multiple panelists is, quality, right? So, you can do many things on the cheap and you pay for it later. Infrastructure in this industry is vital when you're setting up to run your operation. That's key. And, I think you're going to avoid a lot of roadblocks. A lot of problems down the road by really taking, an approach on the front end where you partner with good vendors, you partner with people that have industry experience and can support you from a technical standpoint as well. And by doing that, you're going to run into a lot less problems down the road. A lot of facilities, try that approach, and then 2 or 3 years later, they're almost spending the same amount of money that they spent previous just to fix things. And, that eats right into your efficiency and your profitability, and sometimes makes you go belly up, So, planning on the front end and really looking at who your partners are, and taking that approach, I think will pay huge down the road.
Awesome. We can end it there. Thank you all for joining today. This is Optimizing Operations. If you are mining or want to get into mining, find one of these guys. They know what they're up to. Thanks, guys. Thank you.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.